What's going on, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to take a quick look at a company that reported earnings yesterday, had a big drop down, and has since been kind of slowly rebounding to where it was, and may potentially even get back to the mid-90s. Name of the company we're talking about, Raytheon Technologies, ticker symbol RTX, listed here on the New York Stock Exchange. There's aerospace defense stock. We looked at this actually just about when the ball dropped at the beginning of this year in 2023. And of course, we pull up a year-to-date chart, and you can see that it did go a little bit higher, it did go a little bit lower. Obviously, profits could have been taken, losses could have been taken at some point. But basically, what you're seeing here is what I originally spoke about when I made the video roughly 7 months ago. Is that this is basically a long-term kind of like perhaps an IRA, 401k position that a lot of mid and older people usually have in their portfolios. Reason being is because, again, minus this big drop that we had here, and we'll get to that in a second, but minus that, as you can see again, relatively stable for the entire time up until the report came out the other day. So again, these are the types of investments that you want for the longer term portfolio, as they will most likely not necessarily explode in value, but should slowly keep climbing over the years, and also at the same time should remain stable and not be too volatile and have a massive chunk down like coincidentally we just happened to see the other day with it. But again, overall basically maintaining its value, and of course you're getting paid dividends the whole time to own it. So you do the DRIP, the DRIP stands for Dividend Reinvestment Program, and of course again, minus what happened a few days ago, you would have been sitting pretty for the last 6 or 7 months, so to speak. But right now, RTX down about 3/4 of a point here today, 0.87%, 86.33 a share. Now, they recently also apparently got a couple of downgrades here, 92 from 102, 100 from 115. But again, even as you see here, lowering the price target to 92, still about 10%, well, not really 10%, maybe about 8% higher than where we're currently trading at now. But basically, this company came out, they reported earnings, right? And as we see here, we're seeing a phenomenal beat on the top and bottom lines here. On the EPS side, almost 10% beat. On the revenue side, coming in over 3.5% above analyst expectations. Now, what happened was, apparently, they had a little bit of an engine recall situation. So the stock tanked about 15% right after that announcement. And if we switch over here, we can see that the stock pulled down to 81.35 that day, and then immediately rallied all the way back up to north of $87 a share by the close. And as you can see here now, we drew out our bottom trend line here, so now this is our support level. So as you see, the stock did pull back, however, bounced off that level and climbed up to retest this fib at roughly 87.10, and is now just kind of bouncing around. Obviously, it's probably not going to make a larger move up or down until after 2 p.m. Of course, we have that Fed announcement talking about the rate hikes at about 2 p.m. So everything's just kind of chilling right now. But in my opinion, the numbers do not lie. And even with the recall here, again, very interesting. They brought it down to 81.35 on that announcement, even though the company beat earnings. So now you can view it as a couple of ways. You can either say, A, it was a little bit of an overreaction, so the stock began to rebound, or B, the fact that the company just annihilated earnings. So even the fact that they might take a hit on this little engine recall and hit this little speed bump, in the long run, it's probably not going to matter too much, and it's still going to work out, swimmingly. But coming down here, looking at the numbers, it's really not that overvalued in my opinion. Now we're down to a market cap of about $126 billion. Companies yielding about 2.7% dividend for you to own shares, 23 PE, not necessarily too high. Obviously, it was higher before this drop, and the company's earning almost $4 a share. Look on the EPS side here, just consistent beats going back for the last couple of quarters. And if we look annually, you can see that the company actually increased in revenue during pandemic and has since been doing very well in the last couple of years. And you can see here, back to 2018, they're high on revenue, about $66.5 billion, and you can see here the company is back up to where it was at $67 billion. So this is a company, like we always say, we here in the States, we have a very, very large defense budget. So investing into the Lockheed Martins, the Raytheons, the what's the other one? Oh, what's the other one? GD, General Dynamics, right? There are so many defense stocks that, if you really look at them over the years, have done phenomenally well. Reason being is because we just consistently keep increasing the funding and increasing the spending in the defense sector. So that's why, in my opinion, these companies probably aren't going to go anywhere anytime soon and should remain relatively stable. The question is, would we buy it here at 86.40? And in my opinion, overall, I'm going to have to say yes. Again, I'm going to have to say yes, because the stock, as you see here, was about 97 before this report came out, along with the earnings. So if that report didn't come out, based on the numbers that we saw here, the stock would be $100+, right? So we now have an opportunity to buy a $96, $97, $100 stock down here at sub 90. And if we switch over here to stock charts, I just want to show you here. You can see, of course, the MACD obviously has fallen off a cliff because the stock just chunked down. But look at the RSI here on the daily here, sitting just a touch over 22.5. So the company, on paper in the numbers is significantly oversold here. And that's why bouncing off the bottom and then just having this slow and steady rally back up to the high 80s and potentially low 90s, definitely understandable in my opinion. If we switch over here to the weekly, you can also see the RSI is now sub 34 on the weekly. And this is interesting as well, because I thought that we could potentially see this low right here. As you see on the weekly, the 200-day moving average, roughly 80.58. However, at the lowest of the low, they brought the stock down to 81.35, which means that chances are, I'd say about 95% high conviction, that they are not going to bring the stock down to 80.5 here and have it bounce off of this moving average. Otherwise, they would have initially. They wouldn't have stopped it at 81.35. However, if we back up and we go out a 5-year chart, again, 81.35, you can see this is a massive, massive key level here going back several years here. And you can see, even looking at the candles here, look, you had a low of 81. Right here, you had an open 81.59. Right there, you had a close at like 82. So that's what I'm saying. If you go back here and you can find these points and how the stock reacted, look here, we had a bounce off that level, but look, an open at 81.03, right? A close at 81.11. So that's why, again, like bringing it down to 81.35, basically in line. Look at the low here of 81.52, right? And that's what I'm saying. Look at the open here at the top, 81.80. So that's what I mean. This is right around the key level. Here's an open at 81, and it just goes all the way back for years and years. You can tell that this is a major support and resistance level for the stock, which is why even going from this low here, drawing this trend line across, and of course drawing the line across at roughly 81.35, you can see that not only did the stock bounce off of these levels, but of course drawing across these lows here, you can see that it perfectly intersected right at the low, and then that's where the bounce came. So in my opinion, RTX will probably get back to $90+, but of course it's only a matter of time. But I want to reiterate again, this is a very slow and steady moving stock. So even if we do rally back up to 96, 97, back up here where the stock was, it is going to probably take a decent amount of time. So this time next Friday, the stock will probably, in my opinion, not be back at, $95. So if you're asking me, should you jump in on some calls and try to time it in the next couple of weeks, next couple of months, chances are probably not. If you did not want to invest that much liquidity into shares of RTX up here, roughly 86.5, then I can appreciate the fact that you want to take the cheaper route and buy some calls. However, in my opinion, it still could potentially break this trend line and even retest these levels down here at the 81.5 range. Now, I know, again, I said I was high conviction that it's going to rally up. However, of course, anything can happen, but we always have to understand our risk before we go into a situation. So what I'm going to tell you is, of course, it could stay flat. It could continue to It could break this trend line and pull back a couple of dollars and just hang out at like 83, 82 for a while. So in my opinion, if you are going to jump in and let's say 87.5 or like 90 calls on RTX, you will at minimum, in my opinion, need a couple of months of time. This is not a situation where you should really try to time yourself, because again, if it breaks this trend line here, let's just say after 2 p.m., if markets begin to really drop down, if this breaks the trend line, again, it's going to go back to the low 80s. So I don't want you to position yourself just on the fact that, oh, he said high conviction, so I'm buying 90 calls next Friday, it's going to keep climbing. Again, nothing is guaranteed, nothing is set in stone, and actually, as I'm looking at it, over the last couple of days, you can see that technically the stock is now in an ascending wedge, which we know is technically bearish. So the stock could stay in this channel and get all the way up here to like 88.30 within the next day or two, and then it could just break down and drop back down to 84, 83, right? So that's why I'm saying, again, this is a stock really where you should want to own shares for the long term as opposed to trying to time calls or a day trade in the short term. Now, again, if it stays in this pattern, then obviously over the next couple of days, like I said, you may see the rise up to mid 87s, $88. So if you did want to roll the dice and jump in, buy some naked calls and just ride the wave for a little bit, my advice would be, if it hits some sort of mental price target that you see here in the next day or two, and you are up, even if it's only 10 or 20%, in my opinion, I would take the money and run, because they did initially really beat the crap out of the stock on the announcement. So, again, nothing is set in stone, and if it breaks this rising wedge here, then obviously you're now going to be sitting in losses, and your profit is going to be gone. So not only in a market like this do I say it's a trader's market and you have to be in and out, but more specifically, in a situation like this with RTX, you are going to want to be in and out if you make a short-term call play. Get in, ride the wave, see the profits, push the sell button. This is not a time to get greedy. This is not a situation where, well, I'm just going to hold it and, hope for the best. Hopefully it can get up to 90. No. We all know that the stocks trade electronically, so a lot of times the technicals trump the fundamentals at times. And again, in this situation, the stock has bounced off that low and is rebounding very, very nicely. However, it is rebounding in an ascending wedge. So, again, in my opinion, it may be very, very short-lived, this little rebound. You want to flip some calls, entirely your own prerogative. However, again, we liked the stock when we initially looked at it, $94, $97, right? So now you can buy $97 stock for $86. So for the long-term portfolio, if anyone's already invested into this company and you have a cost basis, obviously, of $90+, now you have an opportunity to add to the position and slightly lower your cost basis. If this is something that you were never involved in, again, seeing the bounce off of that low of 81.35, that key level, was actually pretty huge in my opinion. And I do feel that over time we could even rebound here to this mid-fib level of 91.87. So we could easily get back to the low 90s, no problem. But again, it's going to probably take some time because this is a slower, more steadily moving stock. This is not really going to be the company that just pops, 8%, 10% just because it's Tuesday or whatever the heck is going on. So, of course, it could happen. But, again, we have to be realistic. So, we all know the only companies that really get those pops are overvalued tech stocks and EV stocks. And as we see here, this is a defense company. So chances are they're probably not going to see that massive pop unless someone comes in like an activist and takes a large position now with the stock sub 90. But only time will tell. But overall, I do still like the company. And again, as I said, if that announcement did not come out about the engine recall, the company came in with phenomenal numbers and would most likely be higher than where it was, not lower now where it is. But I'm going to end it there. Just 2 cents on RTX. A popular company by name. A lot of people know Raytheon and what they do and how long they've been around. but this is not necessarily really a widely held stock in a lot of portfolios, and it's not really a go-to stock for a lot of day traders or scalp traders or option traders. You know, that sometimes there are just bigger and better symbols and companies to watch that pop and drop more and could make you more money. So it's understandable as to why RTX may not be on everyone's watch list, on everyone's radar. But again, like I always say, that old adage, if we like the stock up at $96, $97, $98, we're going to love it down here at $83, $84, $86. But that's just my slant. Again, whatever you do with this information is entirely your own prerogative. Just wanted to throw out my opinion there because I know the company just reported earnings, and again, the numbers came in well, but the company took a big hit. So I just wanted to do a little update here on RTX. And let me know down in the comment section below if you were involved in the company and now you took a hit, obviously, on this big drop, or if you were waiting to see how earnings played out and, you know, now you're able to jump in at a lower price and kind of ride the wave back up. So let me know down in the comment section if you have a position in RTX or are potentially considering taking a position in RTX. But I'll end it there. So once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up. Algorithm helps out the algorithm, helps out the channel. Share the video, like the video. More importantly, subscribe to the channel. That is our handshake agreement. I will do updates on any of these earnings, pops and drops, any symbols you guys throw at me. If I see something setting up like Rolls-Royce, another great winner here, hitting new highs today, north of $235 a share. We initially looked at that stock right after the bull dropped at $1.20 a share. So if you got in when we made the video, you are now up a clean 100%, and it took you less than 12 months. So again, there are winners out there. There are brand name companies that are trading at discounts. This is the Buffett method. And buying a company like a Rolls-Royce that has been beaten up, or even an Under Armour or a Raytheon Technologies that is now beaten up, you know, chances are you will more than likely end up more successful than having more failures. But, you know, everyone's different and only time is going to tell. But again, push the subscribe button. That is our handshake agreement. I'll do all this for you guys. You want to join the Discord, you want to get some short-term call-outs, you want to do some scalp trades. If we see some technicals lining up, you want to be in and out looking for some fast money, no problem. Join the Discord. I welcome all of you. All I ask, handshake agreement, if you're going to take these trades, watch these videos, watch my content, take the recommendations, have me make money for you, just do me a favor. Push the subscribe button. That is how you help me help you. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they are very uncertain, especially on a day like today with potential Fed rate hikes coming out T-minus less than 90 minutes. So I want everyone to stay sharp, stay focused, stay confident, stay disciplined. And thanks for stopping by. I'll catch you in the next vid.